The market is always moving. The best dividend stocks to buy today, they might not be the best opportunities a few weeks from now. It's always a game of price relative to value. In the words of Warren Buffett, whether stocks or stocks, I like buying quality merchandise when it is marked down. As stock prices continue to move, good opportunities they come and go. With that said, let's take a look at some of the best income opportunities right now. These dividend stocks trade at attractive valuations and they have pretty high dividend yields. We'll take a look at each of their dividend histories, along with touching on dividend safety going forward. At the top of the list is Verizon, ticker symbol VZ. Second, British American Tobacco, BTI. And third, but not least, 3M, MMM. So before we dive in, I'd really appreciate it if you just tap that like button down below as well as subscribe, because that really helps with my YouTube channel. It helps out with the search algorithm. And to be honest, it really helps motivate me to share more research. Up first, let's look at Verizon. I followed Warren Buffett on this one. He bought about $8.6 billion worth via Berkshire Hathaway back in late 2020. One of the many things he probably likes about this company is its long history of paying bigger dividends. Here's the annual dividend history for Verizon. It's a cash flow machine that's continued to reward investors. Its dividend payout ratio is manageable as well. It comes in below 60%, and the risk of a dividend cut is very low, at least for the next few years. Although, like any investment, it comes with some risks to consider. Warren Buffett, he is not impervious to making bad investments. He's made plenty of them over the years, but on average, his track record is outstanding. I was hesitant to buy right after Buffett because revenue for Verizon, it really hasn't been growing much. All the while, debt has moved up in a big way. The company is leveraging up to invest in 5G and other technologies, which it might not pay off as expected. As a result, investors have beaten down the share price well below Buffett's entry price. The increase in interest rates or discount rates has likely played into Verizon stock dropping as well. Berkshire Hathaway's cost basis was around $59.24 per share. And a few weeks back, I picked up a few hundred shares at $51.23. That gave me about a 5% dividend yield. That's more than a 13% discount to one of the world's best investors. Although he has collected some dividends over that time, but nonetheless, a lower price with all else equal gives me a slightly wider margin of safety. For the next dividend stock to buy, you can collect an even bigger dividend yield. With over an 8% dividend yield, British American Tobacco is a solid income opportunity. It's hard to find this high of a yield that looks as safe as it does. Last year, the payout ratio was below 60%, and this year it has bumped up a bit, but it's still manageable. So here's the dividend history. In this chart, the dividend jumps around a bit, and this is largely due to currency differences. British American Tobacco is headquartered in London. Over the years, the value of the pound has changed relative to the US dollar. Also, the company went from paying semi-annual dividends to quarterly a few years back. So even with all the bad press, this sin stock, it continues to reward shareholders. Of course, there are plenty of regulatory risks with this company, and cigarette smokers continue to decline, which is a good thing, not probably. But I believe the risks are already well rolled into the share price. British American Tobacco is also transitioning away from cigarettes and seeing some success. On top of that, the company's balance sheet has gotten stronger over the past few years. Total debt and liabilities have come down slightly, and all the while cash and cash equivalents has bumped up a little bit. These aren't huge financial shifts, but things are moving in the right direction. Nonetheless, many investors won't touch tobacco companies. So this dividend stock, it isn't for everyone. Even though tobacco stocks have provided some of the best long-term returns for investors. To learn more about investing in tobacco companies, check out why I bought Altria stock back in 2019. I'll drop a link to my old article on that in the description below. I cover 10 reasons why I bought and also cover more of the risks. Some are company specific, but many of them do overlap with why I like British American Tobacco as well. For the last of the best dividend stocks to buy in October, 3M made the cut. Historically, it's not the cheapest it's ever been. It's hard to find good deals with the stock market near all-time highs, but it still offers a solid 3.3% dividend yield, and it might be the safest on this list. Here's 3M's annual dividend history. And these dividend payouts go back much further. 3M is easily a dividend king with over 60 years of straight dividend increases. The recent increases haven't been big, but the long-term trend looks solid. There's a good chance that we see continued or a pickup in growth in the years ahead. One benefit to 3M is its ability to pass along costs to consumers. As inflation picks up, as we're seeing, it can increase its sales, and the company is also very well diversified. 3M produces over 60,000 products, and it generates nearly 50% of its revenue from outside of the Americas. Overall, the company's financial position is solid, and it should be able to continue rewarding shareholders for many years to come. If you split a $100,000 investment evenly between each of these three companies, it'd produce about $5,500 in annual dividend income. If the companies continue to increase their dividends, you'll collect even more in the years ahead. This high of a return is rare in our low interest rate world. Of course, there are risks with each of these dividend stocks, but the risk to reward, it looks solid. I might be adding British American Tobacco to my portfolio next. And once again, I do really want to emphasize that there are risks with each of these investments. I hope you've enjoyed these quick picks. A lot of research has gone on behind the scenes. These dividend stocks are at the top of my buy list. Although once again, the markets are always moving, and these might not be the best income opportunities for long. So I hope you'll subscribe for more updates and the latest investing opportunities. I'd also really appreciate it once again if you just tap that like button down below, because that helps out my YouTube channel. And here's a better breakdown of why I was hesitant to invest in Verizon. I packed more research into that video, and as always, please let me know if you have any comments or questions.